Assalamualaikum warahmatullahi wabarakatuh. My name is Puspita Dewi. I'm from class accounting morning B. Student ID 181042639. Sitting here, I'm invited by lecturer to answer his question given. The questions consist of 3 parts, namely, question on part A deal with the daily activities in the classroom. Question on part B deal with the accounting theory. Question on part C deal with accounting article and accounting video. I start to answer the question on part A. The first question is, do you always attend the lecture of English for accounting? If yes, how often do you attend the lecture of English for accounting? And why must you attend the lecture? And what benefit have you got from attending the lecture of English for accounting? Well, my audience, my answer to the question on number 1 is here. Always attend English accounting course. There is in the presence of a fool, without a single one not being found. The reason I attend English is accounting, so I can take the final exam, and also when to know the account name is English. The benefit that I can get by learning English accounting, that is, I have been able to read in English well from before, have now the name of account. Well, that's always my answer to the question number 1. And then I pass to the question number 2. Do you do your structure assignment given? If yes, how many voice record have you done? Mention the title and explain them in short. Well, my audience, my answer to the question on number 2 is here. Have done 35 structure assignment. Number 1, accounting. Accounting is the system, the comprehensive recording of financial transactions pertaining to a business. Number 2, an article is a page of writing that is published in newspaper or magazine. Number 3, accounting cycle. The accounting cycle is a collective process of identifying, analyzing, and recording the accounting event of a company. Number 4, accounting is important for business as a way to document financial activities and learn from the number. Number 5, in financial accounting, an asset is any record owned by the business. Anything tangible or intangible that can be owned or controlled to product value and that is held by company to produce positive economic value is an asset. Number 6, counting basic. This explanation of accounting basic will introduce you to some basic accounting principle, accounting concept, and accounting terminology. Number 7, a balance sheet is a financial statement that reports a company's assets, liabilities, and shareholder equity at a specific point in time, and provides a basis for computing rate of return and evaluating its capital structure. Number 8, The general purpose of the financial statement is to provide information about the result of operation, financial position, and cash flows of organization. Number 9. A liability account that report the assessment amount that a company will have to spend to repair or replace a product during its rating period. Number 10. A business entity is an organization that uses economic resource or input to provide good or service to customer in exchange for money or other good and service. Number 11. Financial accounting is the process of recording, summarizing, and reporting the merit of transactions resulting from business operation over a period of time. Number 12. A mortgage payable is the liability of a property owner to pay a loan that is secured by property. From the perspective of the borrower, the mortgage is considered a long-term liability. Number 13. Long-term liability definition. Obligations of the enterprise that are not payable within 1 year of the balance sheet date. Two explains are bond payable and long-term not payable. Number 14. The word most popular free online dictionary with definition, spec check, word origin, example sentence, audio pronunciation, word of the day, and more. Number 15. Current liabilities are a company debt or obligation that are due within 1 year or within one number of operating cycle. Number 16. Rule of accounting that shall be followed in preparation of all account and financial statement. Number 17. Warranty liability definition. A liability account that reports the assessment amount that a company will have to spend to repair or replace a product during its warranty period. The liability amount is recorded at the time of the sale. Number 18. Types and for a business entity is an organization that uses economic resources or input to provide goods or service to customers in exchange for money or other goods and service. Number 19. Business organization. An entity formed for the purpose of carrying on commercial enterprise. Such an organization is predicated on system of law governing contract and exchange, property right, and incorporation. Number 20. A mortgage payable is the liability of a property owner to pay a loan that is secured by property. From the perspective on the borrower, the mortgage is considered a long-term liability. Number 21. Liability. A liability in general is an obligation to or something that you owe somebody else. Number 22. Liabilities explain. Liabilities are a vital aspect of a company because they are used to financial operation and pay forward expansion. Number 23. In management accounting or managerial accounting, managers use the provision of accounting information in order to better inform themselves before they decide matters within their organization, which aid their management and performance of control function. Number 24. Why accounting important? Business spend a great amount of time and money in recording their financial transaction. Accounting is extremely important for recording the financial transaction in a business. Number 25. Closing entry. A closing entry is a journal entry made at the end of accounting period that involves shifting data from temporary account on the income statement to permanent account on the balance sheet. Number 26. Capital market. Capital market are venues where saving and investment are channeled between the supplier who have capital and those who are in need of capital. Number 27. Accountability is a noun that describes accepting responsibility, and it can be personal or very public. Number 28. Liability. A liability in general is obligation to or something that you owe somebody else. Number 29. Accounting and financial management are related to the extent the accounting is an important input in financial decision making. Accounting involves into preparing and examining past financial record, whereas financial management involves into planning to achieve its various financial objectives. Number 30. Investor information. The investor relation section provides information to current and potential stakeholders. Securities analysis and anyone who is interested in the financial and operating performance of the company. Number 31. The income summary account is a temporary account into which all income statement, revenue, and expense account are transferred at the end of an accounting period. The net amount transferred into the income summary account equals the net profit or net loss that the business incurred during the period. Thus, shifting revenue out of the income statement means debiting the revenue account for total amount of revenue recorded in the period and crediting the income summary account. Number 32. Accountant. An accountant is a professional who performs accounting functions such as audit or financial statement analysis. Accountant can be employed with an accounting firm or a large company with an internal accounting department, or you can set up an individual practice. Number 33. Definition of long-term liability. A long-term liability is an obligation resulting from a profuse event that is not due within 1 year of the date of the balance sheet, or not due within the company's operating cycle if it is longer than 1 year. Long-term liability are also known as non-current liabilities. Number 34. Current and long-term liabilities. Owning a business is not just about knowing how to market your goods for profit, but also knowing how to manage your finance. This means that whether you like it or not, you need to know the term used in the finance world to be able to analyze, report, and determine your business status. Number 35. Difference between a confined aquifer in an aquifer below the land surface that is saturated with water. Layers of impermeable material are bed above and below the aquifer, causing it to be under pressure so that when the aquifer is penetrated by oil, the water will rise above the top of the aquifer. Well, that's all my answer to question number 2. And then I proceed to the question number 3. You have been asked to sing 2 songs in group and video record your song. Mention the title of your song and explain what the song tells you. Well, my audience, my answer to the question on number 3 is her song title, I Wake Up, which is said for the lyric of the song is after waking up, washing your face, brushing your teeth, combing your hair, eating breakfast, and going straight to school. That's the activity that he always does every morning. Brother John. What the lyrics say is, whether John's brother is still asleep or not, the morning will rise. Well, that's always my answer to question number 3. And then I proceed to the question number 4. Do you do video recording in English for accounting? If yes, mention the title of the article and videos you have video record and explain in short every article or video you have video record. How many video record have you done? Why? Well, my audience, my answer to question on number 4 is her. I did video recording of accounting English totaling 35. The first general journal. The general journal is used to record unique journal entries that can be processed in a more efficient manner. For example, checks written, sales invoice issued, forecast invoice issued, and other can be recorded in a computer accounting system when the documents are processed. Number 2. Managerial accounting. Managerial accounting, also known as cost accounting, is the process of identifying, measuring, analyzing, interpreting and communicating information to manager for the pursuit of an organizing goals. Number 3. Information about the transaction and event of a business is captured and summarized into reports that are used by persons interested in the entity, but likely do not realize the complexity of accomplishing these tasks. Number 4. Financial accounting. Consider that financial accounting is targeted toward a broad base of external users, none of whom control the actual preparation of report or have access to underlying detail. Their ability to understand and have confidence in report is directly dependent upon standardization of the principle and practice that are used to prepare the report. Without such standardization, report of different companies could be held to understand and even harder to compare. Number 5. Managerial accounting. Managerial accounting information is intended to serve the specific and varied needs of management. Business managers are charged with business planning, controlling, and decision making. As such, they may deserve specialist report, budget, product costing data, and other details that are generally not reported on an external basis. Further, management may discuss the parameters under which such information is to be accumulated and present. Number 6. Counting. Counting is the systematic and comprehensive recording of financial transactions pertaining to a business. Number 7. An article is a piece of writing that is published in a newspaper or magazine. Number 8. Accounting cycle. The accounting cycle is a collective process of identifying, analyzing, and recording the accounting. Accounting is important for business as a way to document financial activity and learn from the numbers. Number 10. In financial accounting, an asset is any record owned by the business, anything tangible or intangible that can be owned or controlled to produce value and that is held by a company to produce positive economic value is an asset. Number 11. Accounting basic. This explanation of accounting basic will introduce you to some basic accounting principles, accounting concept, and accounting terminology. Number 12. A balance sheet is a financial statement that reflects a company's asset, liability, and shareholder equity at a specific point in time, and provide a basis for computing rate of return and evaluation its capital structure. Number 13. The general purpose of the financial statement is to provide information about the result of operation, financial position, and cash flows of an organization. Number 14. Financial accounting is the process of recording summarizing and reporting the merit of transactions resulting from business operating over a period of time. Number 15. A mortgage payable is the liability of a property owner to pay a loan that is secured by property. From the perspective of the borrower, the mortgage is considered a long-term liability. Number 18. Current liability are a company's debt or obligation that are due within 1 year or within one normal operating cycle. Number 17. Rule of accounting that should be followed in preparation of all account and financial statement. Number 18. Warranty liability definition. A liability account that refers to the assessment amount that a company will have to spend to repair or replace a product during its warranty period. The liability amount is recorded at the time of the sale. Number 19. Types and form of business. A business entity is an organization that uses economic resources or input to provide goods or service to customers in exchange for money or other goods and services. Number 20. Business organization. Entity formed for the purpose of carrying on commercial enterprise. Such an organization is predicated on system of law governing contract and exchange, property right, and incorporation. Number 21. One mortgage payable is the liability of a property owner to pay a loan that is secured by property. From the perspective of the borrower, the mortgage is considered a long-term liability. Number 22. Liability. Liability in general is obligation to or something that you own somebody else. Number 23. Liabilities explained. Liabilities are a vital aspect of a company because they are used to finance risk operation and pay for large expansion. Number 24. In management accounting or managerial accounting, managers use the provision of accounting information in order to better inform themselves before they decide matters within their organization, which aid their management and performance of control function. 25. Why accounting important business spend a great amount of time and money in recording their financial transactions. Accounting is extremely important for recording the financial transaction in a business. Well, that's all my answer to the question number 4. And then I process to the question number 5. Mention and explain the material you have studied from your lecture and what benefit have you got from the material you have studied? Well, my audience, my answer to the question on number 5 is here material that I have gotten from learning in class in about accounting. Accounting is the systematic and comprehensive recording of financial transactions pertaining to a business. A journal is used to record unique journal entries that can be processed in a more efficient manner. For example, check writing, sales invoice issue, purchase invoice received, and other can be recorded in a computer accounting system when the documents are processed. Well, now in answer to question on part B. Question on part B, the question deals with the accounting theory. Well, that's all my answer to the question number 1. Open this link and you must give the reason when you answer the question you meet in this link. Well, my audience, my answer to the question on number 1 is here. Number 1, the owner invests personal money in the business. Increase in asset accountability does not have an effect. Increase in owner equity because there is an investment. The increase in asset and capital. Number 2, the company receives cash from a bank loan. Asset increase, liabilities no effect, and owner equity increase. Number 3, which of the following will cause owner equity to increase? Cost attract owner income, which can make owner equity increase in income. Well, that's all my answer to the question number 2. Business transaction following is a list of common transactions. Well, my audience, my answer to the question on number 2 in here. 1. Save cash for common stock, an increase in asset and increase in owner equity. 2. Purchase supplies for cash, and decrease in asset and a decrease in owner's equity. 3. Purchase equipment on account on decrease in an asset and a decrease in owner equity. 4. Bill customer for service on account, an increase in asset and increase in owner equity. 5. Paid creditor on account, and decrease an asset and a decrease in a liability. 6. Receive cash from customer bill on account, an increase in a asset and an increase in owner equity. 7. Paid rent for the month, and decrease in an asset and decrease in owner equity. 8. Respect payment for service from cash customer, an increase in an asset and an increase in owner equity. 9. Find cash dividend, a decrease in an asset and a decrease in owner equity. Well, my audience, my answer to the question the number 3. Here problem Debit and credit following is a least common accounting transaction. A. Issuance of common stock to a shareholder for cash. Cash in debit and capital are credit. The reason is because asset increase, the capital also increase. B. Payment of rent for the current month. The burden of rent on debit and cash on credit. The reason is C. Forecast of supply on account applies on debit and cash in credit. The reason is because the equipment increase while the asset decrease. D. Payment to a credit on account. The burden on the debit and cash on credit. The reason is because the asset are reduced. E. Fees earned and billed to customer. Cash on debit and income on credit. The reason is because asset increase. F. Receipt of cash from customer previously billed on account. Cash on debit and income on credit. The reason is because the property increase. G. Payment of cash dividend to stockholder. The burden on the debit and cash on credit. The reason is because H. Payment for a 3-year insurance policy. The expense of the policy on the debit and cash on the credit increase because the burden increase and the asset decrease. I. Increase utilities expense. Burden on the debit and cash on credit. The reason is because the burden increase. H. J. Receipt of cash for service to be provided in the future. Cash on the debit and income on credit. The reason is because asset increase. Well, my audience, my answer to the question on number 3 is here. That's all my answer to the question on part B. And I proceed to the question on part C. The question on part C deal with the article and video. I start to answer the question on part C. The first question is, please read the accounting book that has been given by your lecturer. Mention the title of the book and write and book how many pages does the book have, how many chapters does a book have, and what does each chapter tell you? Well, my audience, my answer to the question on number 1 is here. The title of this book is about posting journal entries to general ledger account. This book has 29 pages. The general journal is a permanent record organized by account number. Posting is the process of transferring information from the journal to individual account in the ledger. The trial balance is a proof the total debit equal total credit in the ledger. Accounts used by a business are kept on separate page or card in book or file called a ledger. It is important for a number of reasons. This creates a record of the impact of business transaction on each account used by a business. It also helps managers easily find the current balance of a specific account. Well, that's all my answer to the question number 1. And then I proceed to the question number 2. You can get the article on the WA group YA group, and you must explain the content of that article in your own English. Well, my audience, my answer the question on number 2 is here. The importance of protecting the environment. Plant, individual, creator, and nature are essential. Plant require and descend demand for developing. Creator need plant to eat, and human need everything to survive. Everything when as regular until the human who devastating it. Nobody of living thing on the earth who can cursing it with the expansion of the human. Globalizing make as of new be well known to you. Globalizing can quicken the rate of economy any place. Innovation create throughout the year turned into an imperator that can be thus much of a stretched human world. Indeed, even to bolster its numeric new advances are received. For instance, a PJ lamentably the velocity of certain mechanical change not took after by ensuring consciousness of accomplishing environment. Monstrous all penetrating broke on by the human physical is expanding alongside expanding human populace from years to years. As long as the waste delivered from the physical get to be one of the fundamental variables dirtied air around us, a ton of natural harm that we regularly listen. For instance, a worldwide temperature alteration, corrosive downpour, nursery impacts, ecological contamination, etc. Well, that's always my answer to the question number 2. And then I proceed to question number 3. What are the titles of the videos above? Who are the speakers in the video above? What do you speakers discuss in the video above? Explain the content of the video. Well, my audience, my answer to the question on number 3 is here. Link number 1, video title about accounting basic. The speak is let's do accountancy basic, accounting basic. This explaining of accounting basic will introduce you to some basic accounting principle, accounting concept, and accounting terminology. Once you become familiar with some of the terms and concepts, you will feel comfortable navigation through the explanation quiz puzzles the other future of accounting.com. Link video number 2. Video title about real, personal, nominal account and golden rule of accounting. The speaker is CBSA. Commerce. Accounting is a process of recording, classifying, and summarizing financial transactions in a significant manner and integrating results thereof. Accounting is both science and art. For every type of entity, whether it is large in size or small in size, it is very important to have a proper system of accounting for proper management of an entity business operation. An accountant must have a good understanding of the terms used in accounting and types of account. An account is the systematic presentation of the all transaction rate to a particular head. An account shows the summarized record of transaction rate to a concept person or thing.